Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Hey, good morning. How are you?
Very well. Some mixed results in the crypto markets right now. Let's take a look. The CoinDesk XBX index is currently at $42,410. Bitcoin trending pretty flat, but slightly up about 0.4%. The CoinDesk Ether price ETX index is at 3188. ETH is also slightly up about 2.2%. And the DFX CoinDesk DeFi index is also slightly up about 0.1% at 405 points. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, a bit of a meh kind of day in the crypto markets. What's your assessment?
It is a bit of a meh kind of day for a meh kind of week, if not a meh kind of month. Look, we had jobless claims come in today. It was at 286,000 in the United States versus they were expecting 225. And you had that extra kick up in jobless claims because of Omicron. But guess what? Omicron's starting to fade away. So this thinking that, maybe the Fed's going to hold off on tapering a little bit longer because of Omicron, that ain't going to happen, guys. They really are going to taper. And I think the market's sort of like, okay, well, not saying that the macroeconomic story matters here, but at the same time, I think that just the market's kind of looking at it as like that one excuse they would have used that the Fed would have, maybe eased a little bit, kept the easing going a little bit longer. You can't even grasp at that. Mm-hmm. So it's just not happening.
Well, at the same time, it seems to be a buying opportunity, or at least at least Andreessen Horowitz sees it that way. They're looking to raise $4.5 billion for new crypto funds. Emily, any news on that?
This is just their way to get the last word. Jack Dorsey fight. Jack Dorsey went after, them and VC specifically, but there really is this venture capital frenzy right now in the crypto world. And, whether or not it's a good thing sort of depends on who you ask. But yeah, this is just another chapter to that story.
Yeah, he's blocked from Jack, so he doesn't know what's going on. Joining us now, we'll have more with our crypto markets guest.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, joining us now to discuss the crypto markets is Dave Nadig, CIO and Director of Research at ETF Trends. Hello there, Dave. Thanks for joining us. So just taking a look at the markets. It's great to have you. It's been a bit of a lackluster month in the crypto markets. I'm just wondering, where do you see the opportunity and what do you see the trajectory going forward?
Yeah, I mean, it's sort of interesting. I spend most of my time in the traditional finance markets, and so we consider a 2 or 3% day a big day. In crypto markets, that's considered boring. So it is still much more interesting what's going on in crypto than what's going on in the traditional finance space. The institutional demand is absolutely still there, right? Depending on what kind of metrics you look at, there's really very little question that institutional demand is still there. It's still coming. It's not all just going into venture capital like we were talking about. There's increased use as balance sheet asset. Obviously, that's a well-known story. I think a lot of the news this morning about what came out of Russia with the central bank possibly looking there to ban cryptocurrencies. We've seen similar, moves from China in terms of them restricting that. I think it creates a really interesting dichotomy with what's going on in the more traditional sort of democratic world we would think of, Europe and the United States. Where are we going to come down on that? I'm actually fairly bullish. I think that being on the other side of this from China and Russia is actually a pretty great place for U.S. regulators to start from. So while I'm not bullish on immediate relief, say, for a Bitcoin ETF this year, I think it's bullish for long-term crypto regulation to be rational.
All right. Taking a look at the GBTC discount, the Grayscale Bitcoin Trust discount, it's at a record low. Seems analysts see the chances of it being converted to a spot ETF anytime soon are also very low. It's now at 26.5%. I wonder, what are your thoughts?
Yeah, I'm very bearish on the idea that GBTC is somehow going to get a pass from regulators and get quickly approved to become an ETF. They do have an outstanding lawsuit. They're trying to invoke the Administrative Protection Act and claim that somehow their shareholders are being unfairly treated compared to, say, the shareholders of BITO, the Bitcoin Futures ETF, which launched back in November. I don't think that lawsuit is going to hold much water, nor do I think that the first move that the SEC would make would be approving the conversion of this versus approving one of the many, many much cleaner filings we've had for just a very simple Bitcoin, spot Bitcoin ETF. So I think it's very unlikely we're seeing a conversion in this calendar year. I actually think it's quite unlikely we're going to see a conversion in the next couple of years, barring some sort of massive, well-telegraphed regulatory shift. So this discount at 26% doesn't have any reason to go away. And I think that's the part that people often miss here. There's nothing structurally that will make this discount go away. The Bitcoin that are in GBTC have no regulatory way to get out. There is no way for that Bitcoin to leave those funds, which means the liquidity is entirely up to the market. And when we're in a market right now where more people want to sell than buy, that's why we're at 40,000, not 60,000. It doesn't surprise me that we're seeing a trade to a huge discount.
Yeah, Dave, is it that people that there are more sellers than buyers, so to speak, or there just aren't enough buyers, period? In other words, has the quantity of buyers fallen off because, for instance, the clampdown in China specifically, and we've kind of lost that huge market that was going in through the OTC desks, not really happening as much anymore, and that's sort of drying up the market, and it's not overcoming. It's not being absorbed by the, let's say, institutional interest that you're describing earlier. I mean, how long can this persist? Are the institutions just buying into a void here?
Well, I mean, they're buying into a void, I would say, is a bit aggressive, right? With the pullback down here to 40, 45 seems very rational to me, right? This market ran very hot, very quickly. Some level of profit taking is absolutely to be expected. When we look at something like GBTC as a bit of a canary in the coal mine for that boundary between traditional finance and sort of true crypto traders, the fact that it's trading as a discount tells us that demand from traditional finance players is lower than it has been in the past. At the same time, it's never been easier for those institutions to get access through other vehicles, or for even retail investors to get access through BITO or any of the funds that are now putting Bitcoin futures directly into a 40 Act package. So I think the buyers are there. I think this was a very natural pullback that we've seen, sort of natural profit taking. I think you're going to see a lot of people use this as entry points for building those stakes long term.
We talked about just now the approval of an ETF happening anytime soon, not happening anytime soon. Do you think Gensler's comments about wanting to regulate wanting to regulate the crypto exchanges has a lot to do with it? In other words, he's not going to necessarily give his blessing on an ETF until he gets control of the way in which the spot markets are conducted.
Yeah, I mean, they've been very consistent that they're concerned about manipulation in the spot market and to some extent even in the futures market when they were first regulating that. So that's very consistent. I wouldn't expect them to just all of a sudden wake up one day and realize that they've been wrong about these things. They're going to continue to fight for more surveillance on the underlying crypto exchanges. It doesn't mean that they're going to try to regulate every crypto exchange in the world. It just means that they're going to put a stake in the ground on the US side of things. Stable coins, I think, is going to be absolutely where we see the first action there. I think it's almost a given that stablecoins will become regulated like money market funds through some sort of hybrid structure. I think that's probably in this year we're going to start seeing those types of proposals. So we are going to see movement, but we're just not going to see it at the front end of the Bitcoin ETF pipeline. We're going to see it at the foundational level, at the exchanges, at the level of stablecoins. That's, I think, where we're going to see those first moves.
And when you say this stable coins, now you're just talking about asset-backed stable coins. Do you think that they'll have any ability to regulate the algorithmic stable coins, which don't have assets backing them? Are they going to make that kind of distinction? Because basically they really can't do anything to stop an algorithmic stable coin from happening.
Well, they can't do anything to stop anything happening outside the United States. And that's one of the really challenging things here is the SEC can only control the commerce that's happening in our borders with our citizens. And so they can't, if somebody launches an algorithmic stablecoin sort of in the ether, as it were, there's no place for them to go and regulate that. When we get to something that's asset backed, now there's something that you can talk to. There's a pool of assets that you can regulate.
Excuse me. Are there any other regulatory actions in the United States that you're looking at this year that could have a very negative impact on?
Yeah, okay. I think there'll be some interesting stuff around taxation. I think this is going to be a really interesting tax year for a lot of people, particularly folks who are doing things in the token market or NFTs. There's a lot of discussion that's going to happen around things like wash sale treatment. I would expect to see more guidance from the IRS in this calendar year, probably covering this calendar year as well, meaning for filing next year. I think that's almost inevitable. There's got to at least be some additional guidance given the number of players in that space. But other than that, I think the focus will be on a crypto ETF, a Bitcoin or ETH ETF itself. The next deadline there is mid-April. We're getting another round of rejections I'm expecting on 19B4 filings, which is what exchanges have to file with the SEC. So really, I don't see much progress here, certainly through the middle of the summer.
All right, Dave. Thanks for your insights. Appreciate you coming on the show. That was Dave Natick of ETF Trends and ETF Database. Coming up, our global policy and regulation update with CoinDesk's managing editor, Nick Day. Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nicolai Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching. And you are watching.
And you're watching CoinDesk TV.
All right, let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XPX index is at $42,473. Bitcoin slightly up about 0.7%. The CoinDesk Ether price ETX index is at 31.92. ETH also sliding up about 2.3%. The DFX, CoinDesk's DeFi index at 406. DeFi broadly up about 0.3%. All right. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we have a report out saying that the SEC chair, Gary Gensler, wants greater scrutiny for crypto exchanges. Explain what's going on.
Good morning. Yes, SEC Chair Gary Gensler told reporters yesterday that he believes his agency should take a closer look at crypto exchanges. And this is nothing new, really. He said this for months at this point. He's gone so far as to name explicit exchanges in the past, Coinbase being one of them, as examples of crypto trading platforms specifically that he believes the SEC should have closer jurisdiction of, because in his view, some of the assets that are listed on crypto exchanges might qualify as securities. Basically, most cryptocurrencies that are not Bitcoin and Ether have the potential to be classified as a security under the SEC's purview. So that's how they're kind of approaching this. The question now is whether or not we'll see, actual action to follow these words.
Nick, we just spoke to Dave Natick from ETF Trends, and I asked him the same question I'm going to ask you. Is part of the holdup when it comes to a potential Bitcoin spot ETF, basically Gensler saying, look, until I get control of the spot markets, you're not seeing these things come through. Is that pretty much what we're seeing here, or is there more to that than just control of the spot markets?
The spot markets are definitely part of it. The SEC has said, and this even predates Gensler, but the SEC has said that they're concerned about wash trading and manipulation in the spot markets, and that is one reason why a spot ETF has not been approved. So if the SEC does get more strict oversight of spot crypto trading platforms, the next step after that would be to, I believe, impose either greater surveillance techniques and tools to kind of, drown out this wash trading and manipulation that the SEC sees, or, find other ways of addressing those key problems. The spot markets, in other words, are, kind of controlling them would be one part of whatever steps need to happen, but I don't think that in and of itself it would be sufficient.
Nick, we have yet another hearing coming up today. What are you looking at for?
Yeah, so in a little over an hour, the House Energy and Commerce Committee will be hosting a hearing on whether or not crypto, or how crypto's energy impact, or what is crypto's energy impact really. We did see the witness testimony published this morning, so we have 5 witnesses, and the comments range from endorsing a shift away from proof of work to proof of stake to Brian Brooks, who currently helms Bitfury and used to be at the Office of the Comptroller of Currency and Binance US and Coinbase, say that he believes that Bitcoin mining is actually somewhat cleaner than the overall U.S. energy grid. He, pointed to the Bitcoin Mining Council and the Cambridge Bitcoin Energy Consumption Index in his testimony, saying that he believes that Bitcoin, even though elected officials could kind of set some of the broader energy questions as to where it comes from, the market should determine how the energy is used, and Bitcoin, from his examples, uses a lot of renewable energies as opposed to, GS coal and other non-renewables.
Mm-hmm. Interesting. It seems to be a worldwide conversation. I mean, just the other day, the European Securities and Markets Authority Vice Chair said that he believed that proof of work mining should be banned in the European Union and had a more favorable take or outlook on proof of stake. So we see those conversations happening in governments around the world. Nick, thank you so much for joining us. Appreciate your insights. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And also, folks, 10:30 a.m., as we mentioned, CoinDesk will be streaming Capitol Hill's Cleaning Up Cryptocurrency hearing live on CoinDesk.com. Also, coming up, we'll talk about the Bank of Russia calling for a full ban on crypto. That's next.
Hi, I'm Kevin Worth, CEO of CoinDesk, and you're watching CoinDesk TV.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, the Bank of Russia is calling for a full ban on cryptocurrencies, and that includes crypto trading as well as mining. Does this ban have any teeth, though? Joining us now to discuss is CoinDesk reporter Anna Badikova in Russia, who has a full report on CoinDesk.com. So tell us, who made this report? What does it say, and how serious is it, Anna?
Hi, hello. So this is actually consultative report from the Bank of Russia, Russia Central Bank. The regulator hopes to get some feedback in the coming months on it, and it's not that scary as it might sound so far, because Bank of Russia is just suggesting that the branches of power in Russia that has legislative initiative will introduce some new legislation that will ban crypto trading, any business, allowing the circulation crypto in the country as well as mining. So it's up to the government and to the parliament if they want to introduce such measures or not. Bank of Russia is a strong regulator, and I would say its position is listened to, but we're still to see what's coming next.
Anna, can you put this in context with how cryptocurrencies have been regarded and treated in Russia historically?
So the Bank of Russia has always been quite conservative on this. It's always been kind of issuing letters and directives, discouraging people from investing in crypto, discouraging institutional investors, especially in investing in cryptocurrencies. While I would say the legislative branch in Russia was not that skeptical of crypto. We had a law on digital assets approved and signed in the summer 2020. And that law basically says that cryptocurrency cannot be used for payments in Russia, but it's a kind of property that should be taxable. And since then, no specific regulation legislation has been provided. So we're still waiting, in fact, for specific laws in Russia to explain how people should report on their crypto gains, how should they register crypto businesses somehow. So things are pretty much in the works. But I would say that the Bank of Russia's crypto skeptic stance has been very much known. I did not, though, expect them to call for such a broad ban. Some people said first that even owning crypto would be banned in Russia. No, Bank of Russia is not calling for owning crypto, but if any trading and mining will be prohibited, it would be kind of tricky for Russians to own crypto.
So, Anna, what does this tell us about the situation with the Bank of Russia as an independent bank? Technically, legally, it's an independent entity. How independent is it really, and how much of this kind of exposes a conflict between the bank and, as you were saying, the legislature or even the presidency?
I would say that the Bank of Russia is quite a strong regulatory body, and it's had Elvira Nabiullina, who has always been openly crypto skeptic. She has a lot of authority in the Russian political elites. However, it's really hard to predict how this move will be taken further or not by other branches, because we've heard a lot of calls to ban crypto before that, and all the way that there were talks all the way to the criminal punishment for businesses related to crypto, but they never came. They never came into reality. So far, at least. On the other hand, there is no guarantee anything like that won't happen in future. So I would just watch carefully what's going on and manage expectations, because crypto in Russia has been really unpredictable for the past several years, and it's really hard to say what's next.
I feel like you could say that about anything in Russia, or anything has been very unpredictable for the past several years, including crypto.
I agree.
But China has its own set of reasons for, its various crypto bans, ranging from everything to concerns about capital controls, to energy concerns, to concerns about fraud and speculation. What do you think is Russia's main motivation for this kind of extreme language now? What is driving it?
Well, for the Bank of Russia, their position has been quite consistent. As I said, that they view cryptocurrencies as a threat to financial stability, as a threat to their ability to manage monetary policy in Russia. They say, people use crypto to kind of pull their money out of the national economy. So the national economy will lack this money that can be invested in the real sector of economy. And people are falling victims of scams, and crypto is volatile. So people are risking their money. And in this sense, it's harder for the Bank of Russia to protect the financial stability when cryptocurrencies are there and are so popular. So I think, it's really hard to say, what other branches of power think, about crypto. But for the Bank of Russia, it's just a big problem. Crypto is a big complication. They see it as a big complication in their job, and they just want to get rid of it. And interestingly, they mentioned this in the report. They hope that a CBDC that is in the works now with the Bank of Russia will kind of replace crypto as a mean of fast and cheap payments. And the digital asset that will be issued in Russia under the new law on the digital assets will kind of replace crypto as an investment tool. So, it's kind of, don't be afraid. You still will be able to invest in these things. You can use these innovative ways of payments, just not crypto. Just we'll make our own version of it. It will be fine. This kind of mood.
Anna, you actually just answered my question. I was going to ask you about the digital ruble, but it seems like they're very explicitly addressing that. So, yeah.
All right. Anna, thank you so much, as always. Appreciate you reporting us and giving us this update in what's happening in Russia. That was CoinDesk reporter Anna Badikova. All right, let's check in with Crypto Twitter for our tweet of the day. This one from ARK Invest Yassine El Mandra tweeting, "I've never heard of anyone who quit Bitcoin to join a bank." Well, it's true. I challenge him on that. We have a crypto winter every now and then, but that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. Meantime, CoinDesk TV will be live streaming the House hearing on cleaning up cryptocurrency, the energy impacts of blockchains. That's at 10:30 a.m. Eastern. Also, check out the Hash at noon Eastern and all about Bitcoin at 3 o'clock with yours truly. You're watching CoinDesk TV. And next up, stay tuned for the daily forecast with Mega Chada to see what's happening in the Asia crypto markets. That's now.
Welcome to the Daily Forecast, January 20th, 2022. I'm Megha Chada of Forecast News, covering all things blockchain. Asia was initially slow to grasp the potential of NFTs after they rose to prominence in 2020, but the region has been swift to catch up since. So what does the future hold? We'll take a look at that story and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, with the Chinese New Year fast approaching, big names in the country have sensed a digital collectible or NFT opportunity. Tech giants Alipay and Baidu are both getting in on the game by launching collections ahead of the holiday, which falls in the first week of February, as is financial service provider UnionPay. Baidu's collection features images for the Year of the Tiger, with the items called digital collectibles rather than NFTs, as has become common since multiple warnings over NFT speculation were issued in state media. Meanwhile, Chinese video gaming giant NetEase launched its digital collectible platform on Wednesday. And over in South Korea, the vice president of Hyundai Card, a credit card subsidiary of the country's largest car maker, says crypto is passing the tulip stage. Jung Tae-yong was referring to how some have compared crypto fever to the Dutch tulip mania in the 17th century, where a speculative bubble surrounded the highly sought-after plant. In a Facebook post, he said, quote, "Virtual currencies have gained dependable brothers named NFT and the metaverse," explaining that the two have opened doors for putting virtual assets to the right use and diversifying investment into digital culture, real estate, and more. Now that's quite a change from April last year, when he said people were making investments blindly. However, Hyundai Card is no stranger to the NFT space, issuing special NFTs for card users back in August 2020. You can find those stories and lots more at forecast.news. Meanwhile, the NFT explosion continues, with data from Dune Analytics showing sales on just the OpenSea marketplace already surpassing the $4 billion mark this year. But what role does Asia play in that? Forecast News' Lachlan Keller takes a look.
OpenSea isn't alone in seeing mammoth sales volume. Upstart marketplace LooksRare only opened for business on January 10 and has already recorded a whopping $5 billion in sales. Market expert Yehuda Petya of CryptoSlam told Forecast News that though he initially believed the surge was down to buyers in the US feeling free to spend in the new tax year, he quickly realized other factors at play, with the Asian market coming into the space. He says that he's seen a shift towards different types of projects getting sales, like the Fanta Bear collection co-created by Taiwanese pop icon Jay Chou, which outsold Bored Ape Yacht Club and Doodles last week. Petya says this is only the beginning and that he's expecting these types of sales to grow 100 times. Sithi Shachala of Singapore-based platform East NFT agrees, saying that, quote, Asia will overtake the Western market in this new crypto NFT world. However, while the boom is already well underway, one expert says that changes are needed to take it to the next level.
I think the hurdle that people have to get over to operate in anything in digital assets and crypto has to lower. Not everybody can yield farm all day long, or not everybody can punt NFTs all day long, right?
For Forecast News, I'm Lachlan Keller.
Are altcoins slowly chipping away market share from the de facto crypto leader, Bitcoin? According to BitPay, market giant Bitcoin was used in about 65% of the transactions on their platform in 2021 compared to 2020, when over 90% of trades used Bitcoin. Let's check in with Michael Wu, CEO and founder of Amber Group, on which direction he's seeing the new economy head. Good seeing you again, Michael.
Thank you. Great to be here again.
Michael, we can now settle our AT&T bills and even buy furniture at sites like Overstock.com and pay via Bitcoin as crypto payments go mainstream. Do you see altcoins gaining traction and market share at cost of Bitcoin as a natural progression?
I personally don't think so. I mean, overall, I think altcoin market share will grow. That's just because overall there will be more altcoins that will have more utility. But I don't think it will be at the cost of Bitcoin overall. We will see adoption of both growing. Now, in pure percentage terms, that might mean, Bitcoin market cap as overall might come down as the likes of Ethereum or other layer 1 tokens or even other leading tokens grow in size. But at the same time, I think it's more about the growth of both Bitcoin and crypto assets in general in areas such as payments, investments, or other utility cases.
Well, talking altcoins, Elon Musk has decided to accept Dogecoin for select Tesla goodies. What do you think of that?
Well, Elon has been a big fan and supporter of Dogecoin for some time, so it's not surprising in a way. And in a way, I also don't think it matters. There's enough market infrastructure out there. There are enough crypto-related financial services provider to convert and provide the liquidity to transact between one coin, such as Dogecoin, to the other, such as dollar stablecoin. Now you have companies like Amber with our products like Wealthy, or stablecoin providers like Circle, who all can essentially transact any coins you want to spend to whatever coins the merchant might receive. So whether Elon accepts Dogecoin or Bitcoin or dollar stablecoin, as long as they accept crypto payments, it's pretty much the same for users who have access to all these crypto financial platforms.
And lastly, Michael, what are you looking to and hoping to see this year when it comes to payment settlements so crypto has a chance of even wider reach? What roadblocks do you see?
I think payment is an extremely exciting area for crypto this year, and we are doing a lot there on that front as well. Now, in terms of roadblock, right, I would say still the overall on-off ramp experience for customers, meaning converting fiat into crypto or spending crypto back in fiat terms, is still not the best. And to make it happen, it requires partnership and collaborations between what I would call Web 2 type of fintech players and the Web 3 type of crypto native players. For example, we are partnering with MasterCard to issue crypto-backed cards, and that can have users spend crypto anywhere in the world with benefits such as crypto rebates and others. Now, this kind of partnership will happen more and more as crypto payment adoption is being adopted globally.
Well, super excited to see what the new economy has in store for us ahead. Thanks so much, Michael. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.